What's up, guys? Let's kick off this video with a feeling we all chase. You know that moment when a trade unfolds almost exactly the way you mapped it out? Well, obviously such trades are rare, but when they happen, it's pure magic. That's what I want to show you today. I've got two long setups that came together really nicely, and I think, the way they played out says a lot about how the market actually really moves if you know what to look for. Obviously, scalping, as we all know, it's fast, intense, and honestly pretty frustrating for most traders. But like many of you out there, I've been through it, trying out strategy after strategy that, they seemed flawless on paper, but completely fell apart in live trading. But then I stumbled on one approach that changed for me everything. And in the next few minutes, I'm going to walk you through exactly how it works, why these trades succeeded, and how you can use the same logic in your own setups. So let's start with this 3-minute chart here, which I think gives us a solid market profile and helps us at the same time understand where we currently stand. Now take a look at this sharp flush below the 380 level. That move clears out a bunch of stops and sets the stage at the same time for what comes next to clear consolidation phases. These zones are key here because I think they generated orders on both sides of the market, a classic market maker tactic used to trap traders and build liquidity. But this is where I think things become really interesting with this next move. As you can see, now the market, as you can see here, drops another 200 points, printing below the 23,050 level. Now, make no mistake here, guys, this isn't some random flush that we got here. It is actually a textbook continuation move triggered by the imbalance that forms just after the second consolidation phase. Now, that imbalance, in my view, signaled a shift in control, with shorts clearly stepping in to drive price lower. And at the same time here, there is something important that you should keep in mind, because I think that you always want to analyze where the market came from, where it currently stands structurally, obviously, and where it might be headed. You'd ask, why is that important? Well, that context, I think, it gives you as a trader the ability to read what the market is actually saying through its price action, rather than reacting emotionally or guessing based on isolated candles. My view is that when you understand the story behind the moves, you stop chasing and start anticipating, and that's really important. And again, this is one of those reasons that so many traders neglect. That's why they lose money when they actually try to predict the market's moves before the market itself reveals its direction. And when things, they don't go their way, what most traders do, well, they often label the moves that the market did as manipulation. Now, guys, please don't get me wrong here. There's definitely manipulation out there, especially for market makers. And, no one's denying that. But it's not happening all the time. The thing is that what many retail traders call manipulation is often just the market reacting to, liquidity, sentiment, and timing, which are rather factors that they didn't fully understand. So keep these distinctions in mind, because I think if you do, they will elevate your game and help you at the same time read the market with a much sharper lens. All right, let's now get back to the charts. Now, after this sharp move lower below the 229 level, we see the formation of a stop run, a classic liquidity grabbing move signaling reversal. It's worth noting that prior to this stop hunting move, the market, as you can see to the left here, attempted but failed to push through the top of this imbalance area, which tells us the base of this whole range wasn't actually established yet. This spring or raid rather on liquidity This spring right here, however, once it formed, set the stage for a reversal and a clean retracement back to the upside, driven by a series, as you can see, of demand bars. Now pay attention to what happens next, because this new low here gets, as you can see, retested following the formation of this demand bar that respects the mid-range zone of this rejection week. That's a key structural clue. Not only why, because not only do we see price respecting prior levels, but we also see the 114 imbalance zone getting filled on this upward retracement, a powerful, I think, shift that leads to a break in market structure. Now I gotta say that break is no accident. In fact, it's a clear sign in my view that a reversal is underway, supported by both price action and order flow dynamics. Folks, when you see this kind of sequence, liquidity sweep, demand stepping in, and structural break, you're not just watching candles, you are literally reading the market's intent. That's exactly why I placed my long entry just above the 159 level. And as you can see, once price broke through, the setup actually played out really well, delivering nearly a 100-point move to the upside, obviously, and at the same time hitting my target right at the 257 resistance level. Again, this was, I think, a clean, well-structured trade, and the follow-through confirmed the strength behind the break in market structure. All right, now that we have wrapped up this trade, let's shift gears and break down the next setup. We are back on the 1-minute chart, and as always, the first step is to look left. You want to understand where price came from, how it's behaving structurally, and what story the market is telling. Now, I know that some of you might be thinking when looking at this 250-point decline, you are probably wondering, why would you go long here, dumbass, right? I mean, isn't that fighting the trend and trying to catch a falling knife? Fair point. But here's the thing, I'm not trading against the flow here. I'm simply reading the market's bias through liquidity and structure. Guys, once you start doing that, everything changes, as in you stop reacting to price and start interpreting it. In other words, you begin to see the narrative behind the movement, not just the numbers. I think the key is to follow, as you know, Wyckoff teaches us, the composite man or smart money. What that means is that don't fight them. Track their footprints and let them guide your decisions. That's how you gain clarity and consistency, and more importantly, that's how you rake in. And now in this particular setup, my long entry was based on a clear structural signal, which means I identified this strong bullish order block just below the 460 level here. And when I say strong, I mean this wasn't just any order block. If you can see, the block previously drove the price over 200 points higher and then acted as a pivot zone, influencing future direction. That told me we were likely approaching exhaustion within this whole range, with the order block again serving as a temporary but still solid support. But guys, despite these clues, I didn't just jump in blindly. I waited for confirmation, and that came, as you can see, when price reversed convincingly and easily filled this imbalance zone, an area that had previously lacked real opposing orders. Now, once that zone was filled, I knew the 540 level would be next, with the 510 imbalance now acting as support. Obviously that reinforced my bias and gave me the green light to enter long. As you can see, the trade performed really well, and despite making a few final target adjustments, overall it was a solid setup with a clean execution. By the way, guys, before you go, make sure to check out the next video where I dive into similar trade setups using backtested strategies that I think consistently deliver results. You'll see how I apply these techniques in real time, obviously, and break down exactly what makes them so effective. All right, gang, thanks for watching, and as always, hope to catch you all in the next one.